Artificial intelligence isn't coming. It's already here, and it's growing faster than any technology in human history. From billion-dollar data centers to your pocket-sized smartphone, AI is reshaping everything. In 2024 alone, the world spent over $330 billion on AI systems, tools, infrastructure, and services. And that's just the start. Experts predict we'll cross $500 billion by 2026 and possibly $1 trillion by the early 2030s. But where is all that money going? What are the smartest sectors to invest in? And how do you position yourself today to ride the wave, not get wiped out? In this deep dive, we'll explore the full AI market, who's winning, what's coming, and how to invest for the long haul. Let's start with the numbers. According to IDC and McKinsey, AI spending globally grew at a compound annual growth rate, CAGR, of 28.5% between 2020 and 2024. That's faster than any other sector outside biotech. The market is projected to hit $528 billion by 2026, up from $330 billion in 2024. That's nearly a 60% increase in just 2 years. But AI isn't one monolith, it's a layered ecosystem. At the foundation, you've got infrastructure, chips, data centers, fiber optics, cooling systems. Then come the platforms, cloud services like Azure, AWS, and Google Cloud that deliver AI to customers. On top of that are applications, chatbots, recommendation engines, fraud detection systems, medical imaging, and more. And finally, the user layer, every consumer-facing tool, from generative AI to smart speakers to autonomous vehicles. Each layer generates its own revenue and has its own investment opportunities. Now let's zoom into the industries fueling this boom. Healthcare is a massive growth engine for AI. From AI-powered diagnostics to robotic surgeries, this sector alone is expected to account for $100 billion plus in AI spending by 2026. Tools like IBM Watson, Google's DeepMind, and dozens of startups are rewriting how medicine is practiced. Finance is next. AI in banking isn't new, but it's evolving fast. We now see AI handling everything from loan approvals to risk modeling and even customer service. JP Morgan Chase recently deployed a generative AI model trained on 10 years of internal research notes. Retail and e-commerce, personalization engines, supply chain optimization, AI chat support. These tools help retailers like Amazon, Walmart, and Alibaba gain edge in efficiency and user experience. Mobility and automotive. Tesla, Waymo, and BYD are deploying AI not just in cars, but in logistics, charging networks, and vehicle-to-grid systems. Logistics and warehousing. Think of AI-driven robots in Amazon warehouses or real-time routing optimization for FedEx and UPS. In short, wherever you look, if efficiency can be improved, AI is being deployed. When it comes to market dominance, a handful of companies are leading the AI revolution. Nvidia, the crown jewel of AI infrastructure, their GPUs power nearly every major AI model, from ChatGPT to DeepMind AlphaFold. In 2025, Nvidia stock soared over 175%, and analysts see upside continuing through 2026 as demand for chips explodes. Microsoft, with its $13 billion stake in OpenAI and full-scale integration of Copilot into Office 365, Microsoft is redefining enterprise productivity. Alphabet, Google's DeepMind and Gemini platforms are pushing boundaries in medical AI, LLMs, and autonomous systems. Amazon, AWS remains a massive AI provider, serving over 80% of Fortune 500 companies through SageMaker, its machine learning platform. Palantir, with a government-heavy client base, Palantir provides secure AI platforms for military, intelligence, and healthcare use. Tesla, its Dojo chip and full self-driving AI stack could redefine transport. These companies aren't just riding the wave, they're building it. What many investors miss is the infrastructure boom behind AI. Data centers consume massive energy. Cooling systems are critical. Optical networking hardware must expand. Fiber optics must scale. AI needs space, power, and speed, and companies are racing to meet that demand. Let's talk winners. Equinix and Digital Realty Trust, two major data center REITs, are seeing record leasing demand from cloud providers. Arista Networks supplies ultra-low latency switches to hyperscale data centers. Vertiv makes specialized cooling systems for AI workloads. Ciena and Lumen, fiber optic giants expanding their backbones to support AI's bandwidth needs. Some of these names may not have AI in their branding, but they're critical to AI's success. Infrastructure investing is the stealth strategy for this decade. So how do you invest in AI? Start by choosing your risk level. Want stability? Go for AI-heavy ETFs like QQQ, SMH, BOTZ, or ARKQ. Want growth? Target individual winners like Nvidia, Palantir, and Arista. Want income? Look at REITs or infrastructure funds that benefit from AI demand. Use phased entries. Don't dump money in all at once. The market is volatile. Buy during pullbacks and earnings dips. Diversify across the AI stack. Infrastructure, chips, fiber power, platforms, cloud, enterprise AI, apps, healthcare AI, robotics, automation. And finally, think globally. China, India, Israel, and the EU are building robust AI ecosystems with public-private partnerships. This isn't just a US story. Like the internet in 1998 or mobile tech in 2007, the AI market offers generational opportunities, but only if you invest with strategy, not hype. Let's begin with the company that arguably sits at the very center of the AI revolution, Nvidia. Nvidia has become synonymous with artificial intelligence, and for good reason. In 2025, it's not just a chip maker anymore. It's the foundation upon which the global AI industry is being built. Over the past 5 years, Nvidia transitioned from a high-performance graphics card company for gamers and creatives into the most critical provider of hardware for machine learning, deep learning, and generative AI workloads. Their H100 and A100 chips, and now the newly launched Blackwell series, have become standard equipment for data centers and cloud providers that power large language models. Whether it's OpenAI's GPT-5, Google's Gemini, Meta's Llama, or countless private enterprise models, chances are they're all running on Nvidia hardware. What makes Nvidia so dominant? It's not just raw performance, it's the software ecosystem like CUDA, cuDNN, and TensorRT that developers rely on to train and optimize their AI models. No other hardware company has built a software layer this indispensable. In 2025, Nvidia also re-entered the Chinese market in a big way. Despite US export controls, the company secured approval to sell its scaled-back H2O chips to Chinese data centers, unlocking billions in previously untapped demand. Some analysts now project Nvidia's total addressable market could support a $5 trillion market cap by the end of the decade. But Nvidia isn't stopping at chips. CEO Jensen Huang announced in January 2025 their plan to launch AI factories, complete turnkey AI infrastructure solutions that combine Nvidia GPUs, networking gear, and software ready to deploy out of the box. These AI factories are tailored for industries like automotive, healthcare, logistics, and even national security. Their gross margins, by the way, now rival SaaS companies, hovering around 78%. This is unheard of for a hardware firm. It tells us one thing: Nvidia isn't just selling silicon, they're selling strategic, irreplaceable infrastructure. In many ways, Nvidia is to AI what Intel was to the personal computer revolution, or what AWS became for the cloud. Except this time, The runway might be even longer, as long as artificial intelligence demands more compute, more memory, and more speed. Nvidia stands to remain the biggest beneficiary of this megatrend. For long-term investors and technologists alike, it's a company to study very, very closely. If Nvidia is the hardware backbone of the AI revolution, then Microsoft is the software soul. In 2025, Microsoft has cemented itself not just as an enterprise cloud leader, but as the operating system for the AI-first workplace. Their aggressive and early investment in OpenAI, now totaling over $13 billion, has given them a front-row seat to the most powerful foundation models in existence. But what sets Microsoft apart is what they've done with that technology. We're not just talking about throwing a chatbot into Bing. No, Microsoft has deeply integrated AI into every layer of their productivity ecosystem. In Office 365, for example, users now work side by side with a digital partner named Copilot. This AI assistant doesn't just autocomplete your sentence, it drafts full emails, rewrites reports, creates PowerPoint slides from notes, and even summarizes live Teams meetings while they're still happening. In fact, in mid-2025, Microsoft launched Copilot Vision, a next-generation feature that allows AI to interpret your entire screen. Not just documents and emails, but what you're hovering over, your calendar, your Slack chats, even spreadsheets with no labels. Imagine having an AI that sees your digital workflow in real time and knows how to assist you across apps. That's where Microsoft is now. But they're not stopping with basic tools. At Build 2025, Microsoft announced the expansion of Copilot Studio, a visual no-code agent development platform. This lets businesses build their own task-specific AI agents without needing to train models from scratch. It's part of Microsoft's larger strategy to create what they call an agentic web, a future where AI agents talk to each other, pass tasks along, and work collaboratively on your behalf across digital platforms. On the developer side, GitHub Copilot is evolving rapidly. In its latest version, it no longer just suggests code, it can generate full functions, debug errors, and even propose architecture. Millions of developers now report 30 to 50% productivity gains using GitHub Copilot daily. Microsoft Azure, meanwhile, remains the second largest cloud platform globally, and it's where most of OpenAI's compute infrastructure runs. They're quietly becoming the infrastructure layer for startups and Fortune 500 companies deploying large models at scale. And let's not forget Microsoft's balance sheet. With over $2.8 trillion in market cap, a diversified revenue base, and a forward-looking R&D culture, this is a company uniquely positioned to win across enterprise AI, cloud services, and developer platforms. Microsoft doesn't just use AI, they productize it, platform it, and scale it with unmatched speed. While others experiment, Microsoft deploys. While Nvidia builds the hardware and Microsoft powers the cloud, Google, under parent company Alphabet, is the research engine driving some of the most ambitious and transformative advances in artificial intelligence. Alphabet is one of the few companies that could claim a legacy of AI breakthroughs, going all the way back to the launch of DeepMind in 2010. DeepMind, a subsidiary of Alphabet, made global headlines in 2016 when its AlphaGo system defeated the world champion at Go, a feat long thought to be at least a decade away. That was just the beginning. In 2023, Google took a major step by consolidating DeepMind and Google Brain, two of its most powerful AI divisions, into a single, unified unit. The goal? To eliminate internal redundancy and accelerate progress on large model research and real-world product deployment. That effort gave birth to Gemini, Google's flagship generative AI platform. Gemini is not just a chatbot. It's a multimodal, multilingual, developer-friendly AI ecosystem that now powers Search, YouTube, Gmail, and Google Workspace. In 2025, the Gemini family expanded dramatically. Gemini 1.5 and 2.0 brought massive performance leaps in reasoning, memory, and in handling long documents. Google even open-sourced a lightweight version called Gemma, designed for local use, giving developers an alternative to closed APIs. But perhaps even more interesting is Google's expansion into AI at the edge. With the Android ecosystem, Google has a foothold in over 3 billion devices worldwide. Its AI tools now live inside your phone's camera, your assistant, your Photos app, your Pixel earbuds, even your car dashboard. The scale and reach are unmatched. On the corporate side, Alphabet made headlines in 2025 by acquiring Windsurf, a $2.4 billion purchase that brought in top talent in reinforcement learning and agent-based systems. Windsurf is expected to accelerate Google's ability to deploy AI agents that can not just chat, but act, automate, and assist in real-world enterprise tasks. Meanwhile, Google Cloud has positioned itself as a top 3 AI infrastructure provider, offering tools like Vertex AI, AutoML, and now Gemini Studio. These let companies customize large models, integrate them securely, and scale production-grade AI into operations. Don't overlook Alphabet's other plays either. Waymo is pushing boundaries in autonomous driving. Isomorphic Labs is working on AI-powered drug discovery. Nest, Fitbit, and other Alphabet-owned hardware platforms continue to integrate AI.
Alphabet's strategy is simple yet ambitious. Own the full AI stack, from research and open source models to cloud services, consumer devices, and enterprise tools. While others deploy what exists, Google is laser-focused on creating what's next. Next, we turn to a company that touches nearly every layer of enterprise AI, yet often flies under the radar in consumer AI headlines. Amazon, and more specifically, Amazon Web Services. While most people associate Amazon with Prime deliveries, Alexa, or its sprawling online marketplace, the real engine of its AI growth is AWS, the company's cloud computing division. AWS is already the world's largest cloud provider, and that position gives it an enormous structural advantage. Because in today's world, every meaningful AI system, from language models to vision systems to recommendation engines, runs on the cloud, and most of them run on AWS. In 2025, Amazon doubled down on AI infrastructure. At the AWS Summit in New York, they announced a $100 million expansion of the Generative AI Innovation Center with a specific focus on enabling agentic AI. AI that doesn't just analyze or generate content, but acts on its own in enterprise settings. Their Bedrock platform now lets companies deploy foundation models from top providers, like Anthropic's Claude, Meta's Llama, and Amazon's own Titan family with just a few clicks. It's AI as a service, with flexibility, privacy, and scalability built in. And then there's SageMaker, Amazon's flagship machine learning platform. In 2025, SageMaker received major upgrades, including new auto-tuning capabilities, secure agent integration, and GPU acceleration features for massive model training. That means any Fortune 500 company, or even a startup, can train, deploy, and monitor production-grade AI systems in days instead of months. But AWS isn't just about infrastructure. They're building tools for the AI workforce of the future. Enter Amazon Q, their new enterprise AI assistant. Amazon Q helps employees summarize meetings, generate code, create reports, and interact with enterprise systems using natural language. It's like having an Alexa for business, but on steroids, plugged into CRMs, project trackers, HR dashboards, and more. Under the hood, Amazon's investment in custom hardware is quietly reshaping the economics of AI. Their Trainium and Inferentia chips are now widely used within AWS, offering AI training and inference at dramatically lower cost compared to Nvidia GPUs. This isn't just good PR, it's vertical integration at scale, making Amazon more efficient than ever before. And the roadmap doesn't stop there. CEO Matt Garman has made it clear AWS wants to be the world's most trusted partner in enterprise AI. Now let's shift gears and talk about a company that doesn't build chips, doesn't dominate search, and doesn't run the biggest cloud. But it might be the most quietly influential AI company in enterprise and defense. Palantir Technologies. Palantir isn't flashy. You won't see them launching consumer apps or chasing viral AI trends. What they do is build mission-critical AI-powered operating systems for some of the most sensitive and high-stakes organizations in the world. Their core product, Palantir Foundry, acts like a digital nervous system for data-intensive enterprises. It's a single, unified platform where companies can ingest, clean, model, and visualize vast datasets. But what's made Foundry so powerful in the AI era is its ability to integrate real-time machine learning and decision automation directly into workflows. Imagine a major energy firm adjusting turbine output across 3 continents based on predictive AI models, or a military logistics unit coordinating global supply chains under battlefield pressure, or a pharmaceutical company using AI to identify new molecule pathways while managing compliance risk. That's what Palantir enables. In 2025, the company saw a 39% year-over-year increase in total revenue, with US commercial revenue soaring over 55%. Their customer base is diversifying fast, from their legacy government roots to Fortune 100 companies in healthcare, manufacturing, finance, and energy. They don't build models for fun, they build decision infrastructure. That means large models aren't just generating insights, they're connected to real-world systems. Inventory management, HR, cybersecurity, defense protocols, hospital diagnostics, and more. Palantir's philosophy is what they call AI with purpose. This makes them especially valuable in regulated industries and high-trust environments like national security and critical infrastructure. Their latest product, AIP, the Artificial Intelligence Platform, is taking things further. AIP allows organizations to deploy full-stack AI agents that operate autonomously within enterprise systems, driving down human workload while increasing decision velocity. And make no mistake, Wall Street has noticed. In July 2025, several analysts upgraded the stock based on Palantir's growth in the commercial sector and their unmatched position at the intersection of AI, security, and enterprise software. Finally, we arrive at a company that's often seen as a car manufacturer, but is, in reality, one of the boldest and most vertically integrated AI companies on the planet, Tesla. Tesla's AI strategy isn't just about building a smart car, it's about creating an autonomous ecosystem, one that spans self-driving vehicles, robotics, power systems, and real-time decision-making. At the core of Tesla's AI efforts is a product you'll never see, but it's arguably one of the most powerful supercomputers ever built, Dojo. In 2025, Tesla's Dojo 2 chip entered full-scale production. Designed in-house and manufactured via TSMC, it's not just fast, it's specifically optimized for computer vision and edge learning. Unlike general-purpose GPUs, Dojo is tailor-made for one goal: to make sense of the world through cameras in real time with minimal latency. Tesla's full self-driving, or FSD, stack now relies entirely on visual input. No LiDAR, no radar, just a constellation of cameras fed into AI models trained on billions of driving miles. Every Tesla vehicle on the road is a data-gathering node, sending anonymized clips and performance signals back to Dojo for continuous model refinement. Think of it like this. Most companies train AI models. Tesla lives in them. But the story doesn't stop with cars. In 2025, Tesla began piloting the Optimus robot, a humanoid machine powered by the same neural nets that control their vehicles. Optimus is designed for repetitive physical labor, warehouse logistics, and potentially even home care and elder assistance in the future. Elon Musk has publicly stated that Optimus could become Tesla's most valuable product of all time. And with Dojo chips being miniaturized and deployed into non-automotive contexts, it's clear that Tesla is aiming far beyond vehicles. Tesla is also integrating AI into energy grid management. With thousands of megapacks, power walls, and solar systems deployed globally, Tesla is beginning to use predictive AI to route energy, manage demand, and optimize battery storage. In 2025, Tesla's energy division reported its highest revenue yet, aided by AI-driven software like AutoBidder. This system allows Tesla assets to bid into power markets and shift loads based on demand forecasts, prices, and weather patterns, all powered by machine learning. And yet, perhaps Tesla's greatest edge is its closed-loop integration. Unlike most companies that rely on third-party chips, data platforms, or software vendors, Tesla controls nearly everything in-house, from the data to the compute, to the model architecture, to the real-world deployment. This gives them a flywheel effect. More vehicles mean more data. More data improves models. Better models improve vehicle performance. For all the market volatility surrounding Tesla's stock, its AI narrative is stronger than ever. This isn't just an EV company. It's a real-time AI lab, on wheels, in factories, and soon in your home. Tesla may have started with cars, but it's ending with autonomy at every scale. But let's be clear, AI isn't risk-free. Valuations are stretched in many names. Regulation is coming fast. The EU AI Act, China's algorithm restrictions, and growing US calls for oversight could slow deployment. Hardware supply chains remain fragile. Chip bans on China and raw material shortages, like rare earths, could choke production. Interest rates matter. If borrowing costs stay high, smaller AI firms may struggle to raise capital. That's why it's critical to hedge. Hold some short-term bombs. Keep 5 to 10% cash for dips. Don't over-leverage your AI exposure. Here's the bottom line. Artificial intelligence is the most transformative technology of our lifetime. The opportunity is vast. The stakes are real. If you invest wisely across infrastructure, platforms, and applications, you can position yourself for massive upside over the next 3 to 10 years. But do it with a plan. Tune out the hype. Stay diversified. Invest in cycles, not headlines. Thanks for watching this deep dive on the AI market. Like, comment with your favorite AI pick, and subscribe for more insights into the technologies shaping our future.